Good day, everybody, and welcome to the VectorVest International User Group Forum. Hard to believe. Oh, we got to take the audio off my YouTube. All right, so hard to believe we are into March already. It's Saturday, March 1st, 2025. Welcome, everybody. I'm going to take a look at the chat and see where we have people coming in from. Um, which side do I want to look at here? Maybe easier to go on this side. All right, so I'm seeing Phoenix. So Jimmer from Phoenix, Augusta, Georgia, with Carol. Hey, Carol, how are you doing? Carol was lucky enough to meet her in Tampa this year. There's Sunny from Winnipeg. We've got Andre from Ottawa, same area I'm broadcasting from today. Marty, good to see you there. From everybody at VectorVest, Marty, our condolences for the recent loss in your family. All right, let's see. We've got Australia in the house. I see Fred and Barry Haas from Alabama. All right, so yeah, I look wide awake. Been wide awake for a while. All right, there's Tony from Ottawa, Gary from Palo Alto, Peter from Antwerp. All right, so folks, there's Stephen from Chattanooga and Bob down in Largo. Folks still coming in there. Uh, Definitely won't be able to get everybody, but you can see international audience as always. All right, so this is being broadcast on the VectorVest YouTube channel. So please make sure your speakers are turned up to hear the audio portion, and the recording will be available right after the broadcast today on that same YouTube channel. All right. If so, those folks that do experience grainy video, make sure to change your video settings. There will be a gear icon in the YouTube screen that you can click on, and then you'll see a quality selection that you can go in on. So, for example, I'm looking at the one I have open here, and it's automatically only done 480p. All right, so if you click on that, you should be able to take it all the way up to 1080p. Okay, so hopefully we can take care of a few of those things for folks before we get started. We do have a lot to cover here, so let's get moving in the slide deck. All right, here's our risk disclaimer. So, as everybody knows, there is risk in investing. So, everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we have that out of the way. That brings us to the agenda. Hopefully, we've got our welcome. We continue to welcome people into the room here. And you see, we will be doing the global market review. I'll be taking us through that, as well as trade ideas. Now, I am joined by none other than Susan Hayes Culleton, Managing Director of VectorVest Europe. She'll be providing the keynote presentation. We are kind of at the tail end of earnings season, but it will keep going on for a few weeks here. And her keynote presentation is entitled Navigating Earnings Season with VectorVest. So welcome, Susan. Great to be sharing the forum with you once again.
Thanks so much for having me today, Rick, and it will be great to meet everyone. I've been keeping an eye on the chat here and saying hello to everybody too. So lots indeed, as you say, to talk about today, and we'll make sure to do that very well.
Yeah, and I was talking to Susan before we started. I missed the last forum because I was going out to see our first grandchild, a grandson, out in Alberta, not too far from Stan's neck of the woods, 2.5 hours away from him. But I did happen to be watching the forum while I was out there, and I found Susan's keynote where she was covering Salesforce earnings. Very, very interesting, very enlightening. It sent me down a rabbit hole of checking some of their earlier earnings calls. So looking very forward to today's presentation. So we better make sure we can get there and give Susan enough time. She's usually, short on words, very quick and brief. so,
well, as everybody knows, I will absorb the time you give me, Rick. So absolutely, I will take over from you as soon as you hand over the baton.
All right. Sounds good. Okay, so we're gonna carry on here. Let me just take a quick look and see what we have. Yeah, I see folks giving the weather updates. Gray day here in the Ottawa area, bit of snow here as well. All right, so let's get right into the global market review here. We're going to start with Canada. Now, I don't know what it is with these international forums, Susan, but it seems like most of the time we're dealing with markets that have pulled back somewhat. And it looks like we're right back into the thick of things there. So starting with Canada, here you can see the color guard in Canada. As you can see, color guard is mildly bullish. I believe Canada is the only color guard that has guidance saying that it's okay to buy stocks. So VectorVest advocates caution when buying stocks at this time. And that is because you can see the primary wave did flip up on Friday. Now, of course, we all know one day a trend does not make. All right, and we can see that from the color guard that we have been moving from a period of yellow confirmed green lights in the price column to yellow and then red lights, and actually a confirmed red light Thursday before we got that green light. All right, so BSR and MTI haven't got down to bottoming levels yet. In the Canadian market, you can see the BSR sitting there at 0.42. Went up a bit on Friday, and the MTI at 0.89. All right, we're in an up-down situation, so short-term uptrend in an underlying downtrend, but we had just transitioned from a down-down, you can see. And on Friday, we just saved our confirmed call. If anybody was watching the market intraday in Canada, you would have seen 3 red lights at one point and the confirmed down already in there. But by the close, we were able to get that green light, and it kept us from seeing that confirmed down. All right, so here is so Canada year to date, 2.12%. And here is a summary of our proprietary market timing signals. You can see the confirmed calls have been up since the 23rd of January, the DEW down since the 27th of February, and then the green light buyer and the primary wave both turned up on Friday on the 28th with that market action. Okay, moving over to the US. You can see the US color guard here. Now the US, if you look at the BSR and the MTI, you can see they were starting to get in closer to the bottoming levels. The BSR hit 0.29 on Thursday, the MTI 0.69. Of course, 0.20 and below for the BSR and 0.60 and below for the MTI are considered bottoming levels. All right, so we got a little bit of a reprieve on Friday there as well. They ended up with 3 green lights. Their guidance reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. And there you can see February not kind in any of the countries. So year to date, the U.S. Only looking at a gain of 0.54% at this point. And here you can see how their market timing signals look. A lot of red there. Confirmed calls have been down since the 10th of December. The DEW turned down. Well, the DEW and primary wave both turned down on the 21st of February. The green light buyer neutral since the 19th of February. Here's a roundup of all the VectorVest nations. You can see year to date, we saw Europe really pick up starting in the fall. So they're the outperformer year to date here as well at 3.73%, followed by Canada at 2.12%, the US at 0.54%, and the Australian market at 0.48%. And you can see what February looked like in all of the countries there. Australia actually leading to the downside, down 2.90%. All right, let's jump right into, here's Australia here. There you can see their color guard finished Friday, 3 ticks into the red, confirmed red light there as well. Guidance reading, the color guard is bearish. VectorVest does not advocate buying any stocks at this time. All right, and you can see also there, BSR and MTI not approaching bottoming levels, but you can also see on Friday they lost their confirmed call as well. All right, I mentioned the performance, so 0.48% year to date for Australia, and look at all the red in their market timing signals. So confirmed call, as we said, turned down on Friday, as well as the green light buyer. The DEW turned down on the 24th of February and the primary wave on the 20th of February. That brings us to Susan's territory. Here you've got the European Union. There you can see the color guard. And you're going to see when we look at the graphs too, the difference between the other 3 nations and the European Union. So they did finish Friday 1 tick into the red. Guidance that reads the color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. And you can see that red light in the price column. But what you'll also see is, look at all their indicator levels. RT still above 1, BSR at 2.55, coming from lofty levels of, it looks like, very close to 5, 4.84 as far back as we can see here. And the MTI still operating well above 1. They're the only market still in an underlying uptrend. You can see them in the down up situation now, and they've maintained their confirmed up in Europe as well. There you can see they're 3.73% year to date. And here's a summary of their market timing signals. So there you can see the confirmed calls have been up since November 14th. DEW up since the 15th of January. Green light buyer went neutral on the 19th of February, and the primary wave went down on the 20th of February. All right, so that's the color guards. Let's take a quick look here at the market timing graphs. Here you can see Canada. Most of the nations are currently dealing with, depending what side of the line we're on, either support or resistance. You can see I have an additional orange line on the Canadian graph here. That's really the level of support. We got above that again on Friday, that we're looking to see whether it's going to be able to hold. It is in conjunction with the 65-day moving average in the Canadian market. And you can see if that level doesn't hold, there is a pretty close level of support right below that. You can also see if that does hold and we bounce, we're not far from an area of resistance right up here from our previous swing high back on the 31st of January. But as we mentioned, you can see all of our indicators operating below the value of 1 in the Canadian market. Moving to the US next here. Okay, so you can see all of their indicators operating below 1 there, and US at a critical level of support here, right here, and you can see where price action is actually dipped below that on Friday, but with a strong close, we were able to come back above that level. All right, so if that level holds, you can see they've got a level of resistance right here, and then another level here. Okay, so they do have a bit of a, we're kind of waiting to see whether this head and shoulders pattern, I should have drawn that out on here, but left shoulder, head, right shoulder, is going to play out. And we're at that critical level where if we do break down below this level and get confirmation of that, we could see that bearish candlestick pattern play out. All right, so that's the US side. Here is Australia. So Australia, a little bit different scenario here. You can see the high that they hit right here. They did pull back and they have broken through this level of support and confirmed that. You can see they're also below their 65-day moving average. All right, so if they do continue moving down, next stop is a pretty good level of support right here. And you can see the next level down, next ride down on the elevator would be another fairly good level with some old tops right in that area. All right, so that's Australia. And then here's where we get a bit of a different picture on the European Union front. All right, so you can see their 52-week high that they were able to hit. Here you can see all of their indicators, as we mentioned, all operating above 1, and in a lot of cases, well above 1. You can see too that they are, so this is an additional line I added myself on the European graph, a little bit of support / resistance, depending which side of the line they end up on, but that zone there is still in play, and still we'll need to see next week whether this is going to be able to hold as support, or they're going to break down and they have another level of support right here in line with the 65-day moving average as well. And then if that fails to hold, you can see this level here, very nice level right down here. All right, so that's the color guard and the market timing graphs for all of the nations. That brings us into the global markets tracking ETFs. Now we've officially flipped over to 2025. Last month we were still doing year to date for the full year of 2024. So there has been some movement here. You can see a few of the countries that weren't in the list before have moved up the list. So you can see China, Spain, and I think Hong Kong we didn't see in here at all in January, and they're within the top 5 of that list now. All right, so you can see as a basket for February, 43 ETFs here, 29 winners, 14 losers. And you can see they were able to outperform as a basket the VectorVest composite. So they were up 1.42%, and you can see the VectorVest composite was down 2.60% for February. If we take a look at them year to date, so we've just got February on the left side that we just talked about, and here year to date, now you can see some of those main players that were able to get into the top 5 here have cracked the top 10 year to date. All right, but year to date, you can also see of the 43, we've got 35 winners so far, 8 losers. As a basket, 5.23% gain versus that 0.54% gain for the VectorVest composite. And you can see Poland, Spain, China large cap, Chile, and Italy rounding out the top 5. You got the top 10 there as well. All right, so that's the global markets tracking ETFs. Here is the market sector ETFs. So all of these found in the US software under watch lists and the cherry picking folder. Okay, so 2025 year to date for the sectors, gold, as we've seen across the markets, has been performing really well. It has pulled back of late, but you can see GDX at the top of the list here. So for the sectors, there are 30 ETFs here. We've got 19 winners, 11 losers year to date. as a basket, outperforming the VectorVest composite, 1.75% gain there versus the 0.54. And you can see, so GDX, XLV, XLF for financial, XLE for energy, and IYZ for US telecom. I guess US, I have to say IYZ. All right. So those round out the top 5 there, and you can see some of the gains there. GDX still holding on to a 17.13% gain. All right, we've also got the 10-day delta for these sector ETFs. So you can see some of the tickers leading the way there. And actually, there's only, 2, 4, 6 on the plus side in the last 10 days. So you can see real estate, consumer staples, healthcare. There's energy again, and then the S&P financials rounding out the top 5. And it looks like U.S. telecom able to just squeak out a 0.21% gain over the past 10 days. All right, so that rounds that up and brings us into the upcoming central bank announcements. Now, this is February, so we were able to get through February. I think we want to give a shout out to, well, Great Britain. They were up in February, cut interest rates again, 0.25%. And Australia, who have been waiting and waiting to join the party of interest rate cuts, finally got their first cut on the 17th of February. All right, looking ahead to March, it's going to be a pretty busy March compared to a fairly slow February. All of the VectorVest nations are going to be up. You can see starting with the European Union on the 6th of March. So they're up. Canada up on the 12th of March. Japan, you can see on the 18th of March, one to keep an eye on for sure. The day before, the US is up on the 19th of March. Then you've got the Bank of England again on the 20th. And there you can see Australia will be waiting to see if they're going to get 2 rate cuts in a row. They're up at the very end of March, 31st of March. That's a Monday. All right, so just kind of looking forward to when we're going to be doing the next international forum. So it'll be the week after that, so we'll know what the result was for Australia at that time. All right, so all of the rate or central bank announcements that we want to keep track of there. Here we have the essays from around the VectorVest world. Another excellent week of essays here, folks. And we have one of the folks who wrote one of them here with us today. But just a quick roundup out of the US from Angela Aker. She wrote one entitled Success During Stagflation. So nobody's saying stagflation is coming, but just in case. So that one was how to use VectorVest to learn how to operate in a stagflationary environment by using the 4 secret to making money with VectorVest, exploiting the home page. From Canada, Don Reitzma wrote one entitled Continuing to Decrease the Fear Factor, Limiting Risk by Learning from Speculative Strategies. So how to use VectorVest to become a fearless investor or trader by ensuring you have enough information to make sound decisions and put probability on your side. And this was a speculative view. So this is a bit of a continuing series from Don. Another excellent read there. So from Susan Hayes Culleton for the European Union, hers was entitled Earnings Season with VectorVest. A look at how to use VectorVest to help navigate earnings season and keep on top of your stock's reporting dates. And of course, we'll get the chance to hear more from Susan on that in a little bit. From the land down under, Robert and Russell Markham wrote one entitled Domino's Pizza Falls in Price. How many people knew Domino's Pizza was listed in the Australian market? But how to use VectorVest to analyze stocks like DMP.AX before earnings calls for possible hints on the call outcome. What do you think about that, Susan? They're hitting the earnings message there as well in Australia, and they
I
have
saw
been in.
I saw actually, Rick, all right, in our earnings call viewer, that Domino's Pizza was one of those up for discussion this week, and it's actually one that I considered featuring myself as well later on in the forum. So it's interesting that that Robert and Russell also had the same idea. So hopefully it's a situation of great minds think alike. I have chosen to take a different direction later on today, but if everybody stays tuned, then they'll hear all about that.
Perfect. Perfect. Yeah, and they have actually touched on a few earnings calls in their last few essays as well. All right, so that's all the essays, folks. Another great week of essays. Hopefully, I know it's early in the weekend, and great that everybody's sharing part of their weekend with us. Hopefully, you'll get a chance to read some or all of those if you happen to find any of the titles interesting to you. All right, so that is the essays. That brings us to the March Almanac. Uh, so just a quick roundup here. So March is characterized by mid-month strength and late month weakness. So we're going to see what we're going to end up getting. Of course, we know we're still dealing with all of these possible tariffs. Are they on or not? Who are they going to be applied to? Yada, yada, yada. Or are they going to be applied at all? So we'll see how that plays out. And well, I guess I'll continue on here because it kind of fits. So, nevertheless, over the last 29 years, the price of the VectorVest composite has gone up more times than down. So, overall, risen 17 times, average gain 2.55%, fallen 12 times with an average loss of 3.39%. So, there is more information there from March of 2009 and also March of 2020. I'll leave that for folks to read, and we'll continue moving ahead here. So we are still in the midst of earnings season, as we have said. As of Friday, 97% of S&P 500 companies had reported. We have 75% beating the bottom line, 63% beating the top line. All right, so quick roundup there. And what does that take us to? All right, so I covered this in the weekly market update, and it actually came from a subscriber. Ron ended up sending me the image on the left-hand side from something that he subscribes to, and I ended up very interested in the image at the bottom. Ended up searching to see if I could find that image. You can see I was able to find the site that showed that image on the right-hand side here. So very interesting to a lot of people, and I think interesting not just from all the talk of tariffs, but when we're looking at investments overall. If you happen to be, say, in Ireland, where Susan is, and you're looking at this and going, what is Ireland? So Ireland is the main importer to Indiana and North Carolina. So other than Susan making trips to those states, what are we exporting from Ireland into those states? So there's some very interesting takes here on who are the top importers into all of the states. I'll end up sharing the links with you. So this one was from Visual Capitalist. Was also able to find that image here and a little bit of a different presentation of it. And also, this was additional information on the Visual Capitalist. You could actually break down all of the states in table form. And here you have 4 links with some of those resources. And I'll just, what I'll do is I'll bring up my browser here. So this one here is the Visual Capitalist. All right, so you can see that that image, the one that Ron had sent me to share with everybody. Here's that table. You can go through the table and click from one table to the next here. So you can dig into that if you're interested in finding out from your country, for example, what you're exporting into the U.S. by state. This is the other image that I showed. So this is from the World Atlas. And then this site was very interesting. This is a Department of Commerce International Trade Administration site. And so this one here, you can see, at least when I went to it, it's defaulted to Texas. So you can see Texas exports to the world, Texas imports to the world. And the nice thing about this is you can actually filter. So if you click here, there you go. You're able to select partners. So you can select from the various countries across the world. All right, so we could select something like Canada, for example. And we could choose any state we wanted. I'll leave this at Texas for now. All right, you can see the data did change in behind. So now we've got what Texas exports to Canada, and this is 2024 data, and what Texas imports from Canada. So top 10 on both sides here. The unfortunate thing is we kind of took a look at this in a couple of different webinars, and it doesn't look like, we can select the US as a whole. It looks like when we're looking at the filter here, the only thing we can select is a state. It would be really interesting if we could select the US as a whole and then break it down by state. All right, so hopefully very useful links and information source there. I also found this one this morning when I was looking by country. So this is trading economics, which I use for a number of different purposes. And here you can see United States imports by country. So you can see Mexico, China, Canada rounding out the top three. And then you can see Germany and Japan coming in there in the top five. This one, it looks like you can make some changes to. I didn't get a lot of time to play with that. But we'll see what else we can do. It didn't look like I could do other countries, though. I got a different view when I tried to switch to other countries other than the US. All right, so that is that. I'll minimize this. And there you have those links again for all four of those sites I just showed. So hopefully that is going to be useful information for folks, like I said, not just for tracking what effect tariffs may have on one country or another, but overall investing, looking for companies that are trading into the US, etc. All right, so that brings us into trade ideas. So let me jump into the software now here. I'm going to start with Canada. Now, I do want to say we did see, we've gone through the color guards, we've gone through the market timing graphs. So we know that guidance overall is not that we're buying stocks. Our markets have been pulling back. And even with Canada, given the fact that we did get that one green light on Friday, VectorVest advocates caution when buying stocks. I would just remind people, even if we get follow through on Monday, don't forget, the new tariff day, I guess, is supposed to be Tuesday, the 4th of March. And also, we are dealing with seeing whether that support zone is going to hold. If it does, and we're able to bounce off there, we're pretty close to resistance as well. So just keep those things in mind. These are going to be more watch list stocks to keep an eye on. If the market does turn and start moving back to the upside, and these stocks do the same thing, then they could be possible choices. All right, so we're going to go to viewers here, and we'll go to watch list viewer. We're going to pick today's date, March 1st. And actually, I'm only covering a few, so I've got another list here. So all right, so we're going to graph these ones for Canada. And I'm going to need to bring that graph over here. And let's take a few things off. So I do have the NPI set up on here. I might have it by default on all countries, but I will tell you that all of the tickers here for Canada that I'm going to show were picked up using the stochastics crossing above 20 search. All right, you can see AGF at the top of the list here. Now, this was stochastic crossing above 20 back in this period here. The reason why I included AGF is because they did turn out to be a really good trade. And you can see that earnings are behind them, and they were able to get through this level of resistance here. All right, so if the overall market does continue to move, hey, we're already through that level of resistance. So possibly you could see AGF continue to move. Now you can see when they did get through that level, you can see that they did pull back and test, and they are looking to break out again. Now what I want to make sure everybody is aware of is if we dial back to 10 years here, and I have to go back, I think, to 12. So just keep in mind that there is previous historic resistance that AGF will need to deal with. All right, but again, if everything lines up market-wise, etc., let me go back to 1 year. That could end up being a nice performing stock. All right, here's Enbridge out of Canada. It's actually an interlisted stock, so this one can be invested on in the U.S. market as well. And you can see this is a bit of a pullback story. So Enbridge has been moving up nicely, put in a new high here, pulled back. There you can see the last tariff day. That was the 3rd of February when the tariffs were supposed to come on, and then it was reversed, or the postponement was announced. Okay, you can see they ran up to that previous high, weren't able to make a new high, and have pulled back once again, and are now starting to try to run. And right here, you can see they're right at this old top. All right, so if they're able to break that top, it's a $61 stock. We need a $6 move for 10%. You can see they do have resistance from the old swing high there as well. From an NPI perspective on this one, you can see both trend and trigger not in place. There you can see their earnings. All right, here's Descartes. This one, nice pullback story here. You can see the earnings moving up nicely. No trigger, no trend as mentioned. Watch list stocks, right? This one is pulled back to a nice level. We'll have to see if they can get support there, if the overall market does start moving again. If they gain support or hold support there, they may be able to take a run to take out their previous swing highs as well. And here's GFL. So they're in pollution control. Earnings, not such a pretty picture. Have been tailing off and kind of a mixed bag for the year. At one point, at least here, we're moving higher for the year. But you can see they still have trend intact here. Trigger is just broken down with this pullback, and you can see they bounced on Friday, very close to resistance here, overhead resistance. So once again, if the market goes and this stock is able to break through resistance and get follow through, could be a good play there. All right, so that's the Canadian picture. Let's jump right into the US picture next. And we'll do the same thing here. And who was I taking for the US? So PGR I have in there only because that was a recommendation in the last international forum. I think we'll stick with those ones. Well, and I lost the other ones. All right, so PGR, Kinross. So we got a gold player in there and American Express. So let's graph all of those. So these two on the US side are stochastics crossing above 20. So progressive, as mentioned, we did mention those. I think it was in the last forum, and you can see really good trade in progressive. They were able to get past the swing high here. You can see their earnings picture looking good, and because they have been moving nicely, you can see both trigger and trend. So trigger, we got back in this area here. Trend right in here when we're looking at the MPI, and as mentioned, broke above overhead resistance, and so far are continuing to run. So if the overall market does, and there's a good chance they may continue. Here's Kinross Gold. So we're playing gold, pullback in gold to a nice level here. You can see their earnings looking nice from an NPI perspective. They still have, look like they might have just lost trigger on Friday, still have trend intact. So with Kinross, we're going to need the underlying to keep moving higher. All right, and if this support level here holds, see if they're able to bounce and continue to move from there. Here's JP Morgan Chase. So this one, JP Morgan was picked up on the stochastic search, but I can tell you they did come back and kiss the 50-day moving average. All right, so anybody who's following, say, the 50-day moving average may have been tracking JP Morgan. And through here, you can see their earnings moving up nicely. With this pullback, they did lose trigger. Trend still intact, and you can see the last 3 sessions they've been trying to bounce from that pullback. Here's American Express, and you can see earnings moving up nicely there with this latest pullback. Lost trigger fairly significantly, just lost trend right in this area. You can see with this pullback back to this old top, a nice level here, looking to find support. You can see they're consolidating along that line, and on Friday, look to start moving out. All right, so that's the US side. What do we have here next? We have Europe up next. Let me bring them into the fold here. And so Europe, we're going to look at these 3. A little bit of a mix. Hey, why is my... There we go. Mouse is acting up on me. All right, so I'm going to take a run at this one. Mutchener Rückversicher, MUV2.de is the ticker. All right, let me take off stochastics. So these were picked up on a Midas Touch, VST divided by RT, looking for pullbacks with the overall market pulling back. You can see the earnings moving up nicely on this one. From an NPI perspective, just got another recent trigger cross. They never lost trend, so they already had trend in this area. And you can see this one gapped beyond its old top here. Let me turn earnings on here. Should have had that on the other ones too. So you can see that's an earnings gap up. Now, a lot of times when we see gap up through levels of resistance, like what we're seeing here, those can end up turning into nice things if the overall market is moving in our favor. So you can see they gapped up. They did pull back and probably retest this level here. All right, so keep an eye on that one and see if it can continue to move. Here's Post Italian. So this is insurance life earnings moving up nicely. You can see a little bit of, so from an NPI perspective, we've had trend intact for a while. We had a little bit of a trigger crossover here, came back, and then curled right around. So a little bit of a pullback there, and then you can see they're able to continue moving higher. So definitely looks like they might have earnings coming up. If we look at last year's earnings, they were the beginning of March. So, oh, no, looks like they just got them behind them. So end of February, they went 21st of February. All right, so earnings are behind them, and we're, just outside of, I think, the 3 to 5 days. So if that market can continue to run, then you may see this one run as well. All right, and here is BGN.MI, so Banca Generali. Earnings moving up nicely on this one. You can see with this pullback to a nice level here as well. We'll see if that can hold. All right, earnings behind them. So they did move up on earnings, then pull back to this level. So you'll see if they can find support there. And once again, if the overall market continues to run, you might see this continue to move as well. All right, so that leaves us with last but not least, Australia. So let me bring Australia up. I just need to change the color back here. There we go. All right, so Australia, watch list viewer, and who do we have here? So we're going with this one, and a little quick story on that one. All right. Okay, so for Australia, this one, two of them were picked up by the Midas Touch, the VST divided by RT search, this being one of them. So another gold play. All right, need the underline to move, but you can see the earnings moving up nicely from an NPI perspective. We still have both trigger and trend, and you can see they pulled back with gold overall. So again, we'll see if we can get support here and if gold continues to run. This one might be a good play. And next, so Pro Medicus. This was actually a recommendation from Russell through Pamela that was recommended to me. Look at this. Look at this stock. Look at their earnings moving up nicely here. So their healthcare equipment and services. You can see the graph moving up nicely here. Trend still intact. All right, trigger did break down in this area as they were consolidating, and then that pullback looks like with the overall market, but they happen to be at a pretty good level here too, where they're looking to find support right now. All right, so once again, if we see that overall market take off, keep your eye on this one. It will need to get through some overhead resistance. And then this one here, I just added because you can see this is an obvious buyout. And I was kind of interested because I track this both in the US and Canada, how many public companies are being bought by private equity. So when I ran into this one, it was picked up by the scan. I thought, what are the chances if I look into this, this was bought by private equity? And sure enough, it was. All right, so this isn't in here as, a watch list trade idea because it was a buyout, but just wanted to hit on it for that reason. I do keep track of that, and we have a lot of companies being bought up by private equity, especially in the technology space, but we do see it in all areas. All right, so without further ado, I am going to go back to the slides. That's it for me. And that brings in Susan. So Susan, take it away. And as mentioned, her keynote presentation entitled Navigating Earnings Season with VectorVest.
Thank you very much indeed for that, Rick. And before I begin, there's a couple of points that I would like to highlight to everybody. picking up on what Rick had mentioned, one is, of course, yes, we do indeed see an outperformance at the moment in the EU. Now, when I say EU, I do want, of course, for anybody who's joining, and I know I saw a range of familiar names as well who are joining me from this side of the Atlantic, that what I'm referring to, of course, is the Eurozone. But it's easier for me to say the EU and you know where I'm talking about. Now, where that has been driven by is two particular sources. One was the a potential ending to the war between Russia and the Ukraine, and obviously, based on matters diplomatic that we saw recently, we'll just see how the markets react to that, and indeed the rest of the world react to that on Monday. But the other issue is something that is very, very central to what I'm going to speak to you about today, and that is, if you look at the returns of the S&P 500 over the past 2 years in particular, there has been a massive concentration around the Magnificent Seven. Now, over the course of not alone my research, but the commentary that has been had around the S&P 500 this year to date, or indeed specifically from the inauguration, is that the Magnificent Seven are continuing to deliver great results, but investors have gotten so accustomed to the really huge earnings results is that when they simply deliver a little bit above or even significantly above estimates, since they're not now extraordinarily above estimates, then people are now wondering, okay, well, where exactly are we going? Now, what I'm going to do today is I'm going to bring you through two different earnings calls of two companies. Both of them are technology, but they're more so in terms of hardware, but they're massive AI plays. And I'm just going to show you what happened last week when the results came out, what I particularly picked up from them, and then how the markets reacted. So I do certainly want to mention that. Now, the other thing though that I also want to highlight to you as well is that we did see last week the announcement about the tariffs being imposed to potentially 25%. Now, the detail here is very, very light. What has been discussed here so far is that we're looking at a situation where 25% on goods, particularly on cars, and also, of course, what's not being really brought into the conversation currently anyway from the US side is services. And the reason for that, of course, is that the US has a trade surplus in terms of services of 109 billion back in 2023. So to put a tax on this, of course, wouldn't necessarily serve the US at all. Now, if you go on then and you take a look into the detail that Rick just gave us there around where, right? So he did ask the question like, what exactly are companies in Indiana and North Carolina buying from a company in Ireland such that we would be the largest trading importer? And I will tell you the answer to that. Number one is pharmaceutical. Now, we have 9 of the top 10 pharmaceutical companies in the world headquartered here in Ireland, and specifically in the county where I grew up, which is Cork. So that is where really big perspective of that comes from. And then the other place, the other, of course, big export that Ireland has is the services that I went back and I mentioned there. So as we're looking at how this is going to evolve, it's going to be very, very interesting, of course, to watch it from a European perspective. Now, I'm going to move on here and I'm going to share my screen. And what I'm going to do now is I am going to bring you straight over to the viewer, because I'm just going to click here on my screen. And are we running there now? Okay, just going to give that a moment to just make sure that we are okay. Okay, I think we are. And now I'm looking here on what you can see on YouTube, and I'm just checking. So I'm just going to, oh yeah, there we go. Very good. Okay, now we're good to go. Now, what I'm going to do is in here, in the VectorVest viewer, I'm going to show you for a start where you can find the company's earnings upcoming or previous. And then I'm going to analyze two companies for you, but would be seen as competitors to each other. I'm going to show you what particularly I'm looking for when it comes to an earnings call. We're going to compare and contrast in between the two using VectorVest to help us navigate. And then after that, of course, I am more than happy to answer any questions that are coming in. And I'm going to hand it back to Rick in around about 30 minutes so that we make sure that we're punctual for you all here today. Okay. Now, I am taking a look here at take a look at your commentary, and I see here Pamela says I've got my fast Irish ears on. Good thing I will be sharing my screen, so you won't just have to listen to me. You can keep up with that too, Pamela. And also, Craig says Susan must be in the parlour. Indeed, many Irish songs along the way to add up here. And Craig says, I popped to Cork only yesterday. And we're talking about a different Cork now. Indeed, Craig. Okay, so where do you find the earnings calendar in VectorVest? Let's say for a start. What I've got here is I've got my VectorVest US open. And if I go back here to my homepage, right, so here's the tab with my homepage. What I would do is go straight over here to viewers. Okay, anybody that's following along, please do follow along with me using your own program. Now, moving on down here then, I'm going to go down here to events viewer. Okay, going to go to events viewer. And when I go to events viewer, the next thing that is going to appear for me over here is I'm going to take a look and just going to just give it a moment there. It will then give me 3 different areas that will appear on this viewer. Number 1 is going to be a dividend viewer. Number 2 is going to be giving me a dividend date viewer. And then number 3 is going to give me an earnings viewer. And this is what I look at all the time to see what's upcoming, what stocks are releasing their earnings in the weeks to come and days to come, and also what has gone in times gone by. Now I see here that my VectorVest 7 is on a little bit of a go slow, so that's fine. I'm going to move on and I'm going to get into the earnings transcripts anyway. And when I come back, that will have sorted itself out. Okay. Now, so Bob says at one time Ireland had very low corporation tax. I'm sure that's why the pharmaceuticals are headquartered there. Okay, now Bob, that's often quoted, and indeed the corporation tax in Ireland is low. However, as somebody that obviously lives here and has a good understanding of this, there's a lot more to it, in my own opinion. Number 1 is, of course, the talent, and I would say that I'm biased. But secondly, I would say is the clustering effect. Is that if I drive along that part of the country where a lot of the farmers are based, whether like I can drive past Pfizer, and then on the right hand side I'll see Janssen, that's part of the Johnson & Johnson group. But then I would go on and I'd see J&J Innovation. There is very much a clustering effect. And of course, the other thing is there is access into the European market as well as the research and innovation capacity, and so on from there. And this, by the way, is not, here's why Ireland is great. This is giving you the rationale for why those companies are here. However, of course, as this conversation evolves about the place for European manufacturing, or in terms of international trade with services, all of those points then will need to go back, and this is where Ireland as a nation needs to consider how to react to this, and businesses need to make decisions as well about how they're going to take on geopolitical developments. Okay. All right. Now, as you can see here, while I was actually answering, there is that you can now see my viewer. Okay. So as you can see there, next week, we can see all of these companies over here releasing earnings on Monday. As you can see, there is a lot. Now, I had to laugh at when Rick there said we're coming to the end of earnings season. The reason I had to laugh is that it never feels like we're out of earnings season. Remember that earnings are released by companies every quarter. And by the time we've gotten through all of them, you're not very far off starting all over again. So like, it's very, in my case, as someone that watches earnings calls a lot, there actually is an awful lot to see a lot of the time. So as you can see there, there's a huge range of them on Monday. And if I keep on scrolling down, as you can see, there's a lot of dividend developments over there too. And on and on and on I could go. And these, if you want to go into the past, which is what I'm going to do for you, well then of course you can go back here in the dates, in the calendar selective dates, and you can go back and you can look at it from there. Okay, now, so I'm going to go back here to my home viewer, and what I'm going to do now is I'm going to tell you the 2 companies that I am going to analyze for you. Okay, so the first one that I'm going to analyze for you is Dell, and the second one is going to be Hewlett Packard. Why did I pick both of them? Well, for a start, both of them had earnings out last week. I'm just going to pull up here. I'm going to add in Dell, and I'm also going to add in HPQ. That is the ticker code for Hewlett Packard. Now, both of them have a sell recommendation, which I find very interesting. Both of them had that sell recommendation issued just last week. And you might say, Susan, why are you telling us about stocks that have a sell recommendation? I'll tell you why. Is because both of these companies are exposed and are a real AI play, which is where, of course, everybody is talking about at the moment. Also, both of them have delivered an expansion of revenue, an expansion of margin, and an expansion of profits or earnings. Both of them were treated by investors whereby the stock price fell thereafter. And if you research why that was the case, there's one word that ties the two together, and that is underwhelm. And this is why I brought up the point and picked up on the point that Rick mentioned there earlier, which is about the European outperformance, is that I think this is what's really it's becoming a big story in the US stock market in 2025, is that investors have become so accustomed to absolutely blistering outperformance when it comes to tech companies that their underwhelm is now the name of the game. If I had picked both of these companies with the earnings that they had, and I went back 2 years, the stock market performance would have been very different. The reaction would have been very different. And what's more is that I also decided to put together a collection of graphs over here. And I'm just going to, I did this before we went live today. And look at what happened. Obviously, the big one that everyone is talking about this week is NVIDIA. Like, NVIDIA had a massive increase in profits last week. And what happened? Well, we saw the share price falling. If we go on here and we look at Amazon, okay, let's take a look at that. Here's obviously another company powering ahead. What do we see here when we go on to Amazon? That's NVIDIA. Let me just scroll down here. Again, falling share price. Let's go to Google. First company that has been at 100 billion in net income ever, right? Now let's take a look. What has the stock market done in response to that? Let me scroll down again here. And there we are. Google. Now we see a drop down from its height at the beginning of this month, $207 a share down to 172. So, of course, I could have picked up on NVIDIA's earnings and I could have talked to you all about it today. But the point of the matter is, first of all, it's been really, really well discussed. But this is a real story. This is what investors are navigating. And Rick brought you around the world. He showed you how the market timing indicators are looking in the US and Canada and Australia as well as Europe. In Europe, they're broadly positive. They are broadly positive. And again, I think that is because we saw, like, we were seeing a lot of hope, obviously, up until the end of last week about the war, but also is that our stock market is not deriving its returns solely from technology companies. And that is where I think things are interesting. The other thing is, of course, the divergence between interest rates. And Rick had a slide on that. I won't elaborate on this, but the expectation is, because Europe's economy is flat to, it really would be, it's flat to anemic, I would say, particularly the bigger markets like France and Germany. So inflation is not necessarily a concern, really, when you come to the European markets. Instead, what monetary policy is now seeking to do is to be more concerned about, like, adding life into the European economy. Whereas when we look across the water in the US, it's a different story. Now you're looking at, if you put a tax on imports, which is what tariffs basically are, you're going to inject inflation into the system. So as a result, what do you do there then when you're trying to manage interest rates? And of course, you are dealing with quite a strong economy and high levels of employment as well. So we're seeing a difference there in between the two. Now, let's bring it back here. I'm going to take a quick look here at the commentary. With the market for big tech already priced to perfection, it's hard to exceed expectations this year. Erwin, that's the point. That is the point that I'm making. And so when I do bring you back, and I will get into the nuance of what happened with Dell and Hewlett Packard this week, you will see how your statement is spot on. He said it's really, really, really hard now for these companies to exceed the expectations that are already elevated when they're delivering above average growth. And so let me get into it. Okay, I'm going to bring you back over here. Here's our two companies, Dell and Hewlett Packard. Okay, both of them. You can see here the changes in the share price last Friday, yesterday. But you can see both of them have now fallen below their stop price, which of course is a 13-week moving average adjusted for risk here at VectorVest. Okay, now let's get into it. Right, I want to first of all go to bring you over here to the transcript. Right, let me bring you to Dell. Let's start off here, right? Now, one of the key things, the big statistic I wanted to direct you towards here, and this is incongruent. Incongruent is a word that I like because I think it really gets across the point. When I show you this number, it's absolutely startling that we would have seen a decline in stock market performance when we're looking at the impact or the efforts that both of these companies are making. Now, there's a term here. I'm going to Control F. I'm going to bring you to TAM. Right, here we go, TAM. Here's TAM. TAM refers to total addressable market. Now, total addressable market is the sheer size of the market that a company sees is available in the whole market. And of course, naturally, they all want to get as much market share as possible. Now, what I find striking in this earnings call is it says the AI hardware and services TAM, total addressable market, has nearly doubled over the course of a year. 1 year. 1 year. Now, and in that case, it says it has nearly doubled over the course of the year to $295 billion in 2027, and that's growing at 33% CAGR, which is compound annual growth rate. Now, if you were to tell, and by the way, obviously, Dell is not a small company. If you were to say to any company owner that the TAM in your market has doubled in 1 year, that shows blistering growth. Blistering capacity for growth. And also, I don't think that that's necessarily going to stop after a year. Now, the next question, of course, that you would ask if I had told you that the share price fell as a result, what one would say is that, okay, well, is the company losing market share, or is the company reducing its growth in its sales? Is it either not growing as quickly, or is a competitor outpacing it? And if I am an investor in this company, what I really want to know is not just are the earnings growing, but is the margin on the earnings growing? Because if the margin on the earnings are growing, that means for every dollar of revenue that it takes in, how much of that is going straight to the bottom line. If the percentage margin is improving, and if the margin is improving, the revenue is improving, the market is improving, like that's pretty good, isn't it? So let's see if all of those three are actually happening. First of all, I want to bring you to the top line number, which is 8%. Okay, I was going to bring you to the top line number here. Yeah, okay. So the full year revenue for 2025 was 95.6 billion, which is up 8%. Operating income there is 8.5 billion, right? So as you can see, of the 95.6 billion, round about 8.5 billion fell to the bottom line. So that is telling us that the company is, number one, it's actually growing its revenue, and secondly, it's profitable. Now, I think you probably would have guessed Dell was profitable anyway, but here's where it's spelled out. Not alone is the company growing its revenue, but it's also its OPEX, which is its operational expenditure. So this is on things like wages of people who work in the company, the software that it uses to run its own operations, etc. That has also been reduced by 4%. So we can see revenues increasing, and we can also see that expenditure is falling. Both of those things we would want to hear as investors, wouldn't we? Of course we would. Now, but the real thing is, well, what impact has that made on earnings per share? Because that is what really matters. And then you can see over here, it goes on then to tell us it resulted in a record earnings per share of 8.14 cents. That is up 10% with a cash flow of 4.5 billion. So these are the headline figures here, and the market wasn't happy. Market was not happy because it said, well, that's underwhelming. And I think that this is where, as investors, we need to understand that this is the new paradigm that we're living in. Now, does this feel a little bit like previous times when companies were delivering really strong outperformances quarter over quarter, year over year? We became accustomed to them. It kind of does. But the question is, how do we handle this as investors? Because VectorVest at the moment is saying both of the companies that I'm highlighting for you today, both of them have fallen below the stop price. Both of them have a sell recommendation at the moment. So am I saying that we need to look at these from a buy perspective? No, I'm not. I'm saying this is how the market has reacted to what really would be quite good news, in particularly decreasing costs, growing revenue, growing earnings, rapidly growing market. And all of that taken into consideration is now leading to a decline in share price performance to the point of where the price is below the stop price. And that, I think, is one of the defining characteristics of 2025. Now, if I keep going after that, let me get on to the margin, right? Let me get on here to the operating margin, gross margin. Yeah, let me get on to the gross margin. Of course, as you know, the place that you generally find out about the not so good news is in the Q&A of an earnings call. But let me just pick up on 1 or 2 points in Dell that they said, okay, we do have issues here. So the first one here is this. It says, oh, sorry, that's not the reference I was looking for. Yeah, here we are. So it's saying gross margin was 5.8 billion or 24.3% of revenue. When I show you Hewlett Packard, the gross margin isn't as high as this. So Dell would be outperforming in this area. But in particular, this means that for every $100 coming into the company, $24.3 of that is contained as gross margin. And then, of course, you've got all of their costs then thereafter that. Now, in addition, for any of you, because I saw some conversation there in the chat, I saw some about dividends, right? Now, in the case of the dividend, let me go down here. Yeah. I wanted to highlight to you is that there was an 18%. Where are we here? I want to get you the 18% figure. It's not that one. It's not that one. And there we are. Yep. They announced an 18% increase in their annual dividend per share, which was well above the long-term value creation network. So there's quite like, despite the fact that they've had the share price fall, the dividend has increased, and they're also continuing to commit to returning capital to shareholders through buybacks and dividends as well. Now, what are they pitting their future on, right? Because in my own case, I've been a customer of Dell in the past where I've basically gotten a laptop. I wouldn't say necessarily that I've engaged with the company any other way, whereas when I get onto Hewlett Packard, I would have, because of course they have a whole print session as well. But the real thing that they're absolutely backing all the way is AI, right? They're backing, like you'll see 52 references here in this particular one, but it's the AI PC. That is what you can see here. They're now saying that they're furthering their #1 leadership position in commercial AI PCs worldwide. Now, I had a chat with Clay about AI PCs. Clay is producer of the show here today, and he's one of the most techie guys that I know. And I don't see an overriding. I don't hear everybody going out to buy AI PCs at the moment. They're expensive. They're a little bit novel, a little bit new. And of course, if you need a new PC, would you simply buy one because there's an AI one available? Well, personally, I wouldn't. I would be possibly buying an AI PC when my existing PC isn't doing the job anymore. But this is where Dell and Hewlett Packard, but this is where Dell is really backing. It's backing the fact they say themselves they no longer are buying any other PCs apart from AI PCs. So they're anticipating that all of us, whether we're a business or whether we're a consumer, will be buying an AI PC in the future. And I think that that's a fairly strong assumption. But also, of course, you then have to ask, well, where is their supply chain? Because this loops back to the point that Rick made earlier on about tariffs, and that I elaborated on when you look at this from a European point of view. So look at where 90%, okay, 90%, okay, have we got that here? Let me just see here. And you know what? My 90% figure that I was about to give you is, yeah, it's actually for Hewlett Packard. So I'll come back to that. But what Dell has said is in the Q&A, what they said is this. It came up quite a number of times. So what they said is I could just bring you, I'll just summarize briefly what they said is that they have run all sorts of scenarios this year as regards tariffs, where they might be, who they might be imposed on, whether that might be in terms of the location and where that location might be relative to their manufacturing base. And what they're factoring in and what they're planning is either #1 is that it will simply be factored absorbed into the pricing. They're not necessarily looking at reshoring any of their manufacturing, but if there is one thing that they might have to do, it might be to have to adjust their prices to the consumer. Now, of course, I'm sure that's not what they want to do. And this is where I'm a little bit confused about why tariffs are the first prong of attack when it comes to putting these on, because if you tariff imports into a country, then you're going to be impacting the cost base of a company as well who is subsequently exporting. And that is basically what Dell is saying, is that, look, they need to figure out how to make all of this happen. But at the moment, what they're factoring in is they're going to be where they're going to be. They're factoring in different scenarios. But the key thing is that they will adjust prices if they have to along the way. Okay. Now, let me just take a look here and see what's going on here. Okay, Irvin says these reactions remind me of Cisco and Microsoft back in the early 2000s, led to a poor decade in price rises in spite of ongoing rising earnings. Well, this is what we're seeing at the moment. Now, it'll be interesting to see what changes, because another big thing, of course, another big development that's happening is from an AI play, and I mean the service of AI, not the goods. Like here, we're talking about the physical devices. From a services point of view, there's really big competition around the world. And I don't need to mention DeepSeek here as an example, but there's a lot of really big competition around the world from this perspective, which I don't think you would have necessarily seen back in the 2000s. But at the moment, yeah, investors have gotten accustomed to blistering earnings. Now, let me see. Shea says, so buy Dell. No, that's not what I'm saying at all. What I'm saying is that when we are analyzing the stock from a VectorVest perspective, I would very much take into consideration is that we are looking at an environment where the relative value might be there, right? We can see the relative value of 1.45, but the relative timing is at 0.79. The relative safety is below average. Is that I wouldn't necessarily be saying that the market is wrong. What I'm saying is this is how the market is reacting. And we have to listen to that. And Rick earlier on walked you through the market timing indicators about how we can navigate the global markets. But my point is, from a stock specific environment where we're simply looking at tech stocks, is that the mood music has changed. And it's not just the two I'm talking about. This is why I showed you some of the Magnificent Seven as well. And if this is the environment we're operating in, well, then where are the returns going to come from if you've got rising earnings, but investors not reacting necessarily positively with them because of very, very high expectations, and you've got an environment of tariffs? Then you do need to have VectorVest all the more then to help you understand that type of environment. Now, okay, then Veronica says, when should we buy when the stock is sell on VectorVest? Well, the answer is, Veronica, is that a sell recommendation is exactly that. The reason a stock has a sell recommendation is because the share price has fallen below the stop price. Now, the next place it goes into is a hold, and then it goes back to a buy when we can see the RT above 1, which I'm not seeing at the moment. Like, as who says it here, James goes on to say the Dell is down 22% since June. If it's down 22% since June, well, then of course we see the relative timing is in decline as well, and that currently is at 0.79. That would have to go above 1. The VST would have to go above 1, which it currently barely is, but currently is. We would also then need to see the price trending away from the stop price, as well as going back over the stop price, to answer your question. Now, Craig says, I would buy Dell before the dividend X date, Veronica, and then see what happens after that. Now, if you're buying from a dividend perspective, then, just make sure that you understand why you're buying. Some of the best stock market guidance that anyone can ever give or receive is know the reason that you're buying and sell when the reason that you buy is no longer there. So just factor that in there as we go along. Now, Pamela says, if that is all they're supplying, that's what we will have to buy, not necessarily by choice. Interesting point, Pamela. Now, they're saying in terms of their own technology that they're providing for their own staff, that is what they're buying now. They specifically, what they do in terms of their own sales, they generate sales from PCs, servers, storage, and AI solutions. And also, by the way, just on that point, one more number I'm going to show you about Dell before I move to Hewlett Packard, because of course the clock is ticking. I was very struck by this number. Look at this number was 37%. Yeah, 37%. Look at this. Here we are, is that servers and networking revenue was a Q4 record at 6.6 billion, up 37%. It makes sense, doesn't it? Is that when you think about the devices that we have, a smartwatch, a smartphone, earphones, smart devices at home, is when you've got more and more devices, they need to talk to each other. And this is the basis of the Internet of Things. Or when we talk about cloud, when we talk about saving things in the cloud, well then as a result, servers and networking is naturally a big source of growth of their revenue. So as a result, like I did research, what is it that led to the decline in the share price? And it simply is underwhelming. The business and the metrics are pointing towards growth across the ones that are important. And as I say, it has a higher operating margin than gross margin, than Hewlett Packard, which I'm about to show you. Okay, when does the value get updated in VectorVest since earnings has occurred? Craig asks all the time. It's done in real time. So the earnings data is fed into the algorithm. So all of what I'm telling you, what I'm reflecting to you is being updated as soon as the market opens after the the earnings. If the earnings have been released after the market, obviously it can't. But then after that, then it is all reflected in real time. Okay. Now I see loads more comments in here, and I'd love to get back to them, but I'm going to move on to Hewlett Packard, and I'm going to be quicker on this one so that I make sure that I'm timely. All right, so here we go. Here's Hewlett Packard in this case. Different business, same play. The big play again is AI PCs. That's where they're really doubling down. Now, the contrast I found with HP though is they also shared something that they're not continuing with. They've decided to cut gaming. And the reason for that is they want to be at the forefront of the future of work. That's what they particularly want to do. So, let me just close this now. Oh, and okay. Let me just get into this here. Now I'm just going to, let me just get the word gaming. Yeah, gaming will no longer be one of the key growth areas and will instead be managed as part of our core portfolio, because even though it'll continue to be a part, it's not directly related to the future of work. That is what HP is absolutely hanging its hat on, is being the future of work. Part of the future of work is where it's going, where they're focusing on AI, on managing devices remotely, on all of those different elements. But the one thing I wanted to also point out here, I covered HP a couple of international forums ago, and I focused on Hewlett Packard, and I was particularly picking up on their instant ink package, because I was making the point how in the past in the present, if I need ink for my printer, I will go out and buy it. But HP is trying to get me away from that and to where I can subscribe instead to what's called instant ink, where either I get a package and that the HP can monitor my printer and send it out to me, so I don't need to go and buy it. And of course, while that is for my convenience, it's also to make sure that I'm spending money on cartridges in advance of needing them, rather than letting a period of time elapse where I may not be doing it. And of course, I could be at risk then of going to a competitor. So it's instant ink is a shift away from that once-off purchase or lumpy purchase to something more recurring, which of course would be great for the business model itself and for the continuity of its revenue and for the regularity of its earnings, and thus good for investors. What I thought was interesting today is that now, again, we'll get to 1 million. Let me get here. Yes, this quarter, they achieved a milestone of 1 million instant paper subscribers with double-digit revenue growth as they continue to drive revenue growth in industrial graphics. So when it comes to those recurring types of business models that Hewlett Packard is seeking to introduce, you can see there that they are hitting the milestones as they go along the way. Now, is that as fast as they might want it to be? I'm not sure, and they don't say. And as you can imagine, an earnings call is when you put forward the company in the best light. That's why you've people like me who are analysing this and using VectorVest to compare and contrast, looking at other reactions and so on, as well as my own financial and economic background to make sense of what it is. So I can distill all of that for you. Now, they have certainly implemented a lot of savings. They talk about 1.9 billion. Yeah, here we go. So there's they're now planning to deliver 1.9 billion in gross annual run rate structural savings by the end of the fiscal year 2025. You hear this a lot from companies. You hear it a lot in terms of they have their process is driven about how do we automate, how do we eliminate, how do we increase efficiency. And you're hearing that across the board. Like I heard the same in FedEx's earnings. You hear the same from Dell's earnings. You hear across the board, you hear that a lot of companies, the tech companies, are in cost cutting mode, partly because they can. And of course, a couple of years ago, we had a really big drive where you've had a lot of companies laying off staff because they realized that they had overhired after the pandemic and were getting very nervous about how they were going to put all of these people to work. Even in Ryanair, I was interested by that. I analysed Ryanair's earnings, of course, a low-cost European airline that I'm very familiar with, and I wrote my views on that. And even they had said, and they're not a tech company, but they had said as well that they had overhired. And when we compare the sense of where companies are coming, big companies are coming from with their labor forces to the full employment figures, that there's another little bit of an incongruence there, but I won't get into that today. Now, I do want to tell you about the gross margin. Okay, so we'll go over here to the gross margin. This is not as good margin. Yeah, gross margin was 21% down year over year due to increased commodity costs. That bit in particular is, if the margin is down, it means that even though sales might be up, the amount that is being received and that's gross margin. That's only before costs, like sales, general and administrative costs. So that one would be slightly worrying all there. But also in general, their net revenue was up 2% nominally and 3% in constant currency. Now, I also want to highlight to you what they're doing in advance. Now, this is where I want to bring up my 90% figure. Here we are. When it comes to tariffs, what is going on in the case of Hewlett-Packard? Well, they said they have made a significant progress. By the end of fiscal year 2025, they expect more than 90% of HP products sold in North America will be built outside China. So when people are saying, you know, what is the impact of tariffs? You know, Rick there had mentioned about tariffs being implemented in Canada on Tuesday and Mexico. Even in my own case, when it comes to the discussion around Europe, is companies can't afford to sit around and see what will happen. Is what you're seeing is stockpiling, you're seeing advanced buying, and they're talking about this now. I mean, they talk about how with regard to working capital, as part of the tariff response actions, they purposely produced additional inventory in case other companies want to stockpile and took advantage of strategic buy opportunities as part of overall cost mitigation. So the conversation around tariffs is leading to action on the part of the companies. Even at a political level, there might be not absolute clarity. And I mean, the funny thing is, when it comes to the fact that, like, we're recording this live, I'm right here with you right now and we're live and it's Saturday and this is supposed to be implemented Tuesday. By the time Monday comes or Tuesday comes, we actually don't know whether that will happen based on what massive changes in decisions we've seen happening in a very, very short period of time. So, but at the moment, companies don't have the time for that and they can't react in a second. So what they're doing is they're proactively making decisions along the way. Now, I am going to bring up one more thing here, and that is that when it comes to the location, right, in the earnings call, they talk about the various different locations, but I was interested by this as well. 1/3. Let me just get here now. Here we are. No, that's not it. And yeah, they point out 1/3 of their revenue is generated in the US, 1/3, which means that 2/3 of the revenue is generated outside of the US. And as a result of that, when you take into consideration euro denominations and so on, Hewlett-Packard is really diversifying its operations right around the world. That is one last thing, and then I'm definitely handing it back. Then is looking for there we are, right. And there we go. Yes, this is what they're backing, right? And similarly, Dell R2, they say our current expectation is that the penetration at the end of this year will be more than 25% range, slightly higher for the 20% you mentioned. They're expecting that 25% of people would have customer adoption of AI PCs. Now, I think that is ambitious myself, but that is what they're both backing. So in summary, it's where we're at the moment in terms of a big story that's happening this year. I think it's really important to understand, and it's important to constantly question, what is AI? It can't just be the big shiny thing we're all talking about. Get into the nuances behind it, and also understanding how tariffs and other geopolitical and economic factors are affecting the stock market, but also how to use VectorVest to analyze this. That's why I didn't just come off that earnings call with Dell and Hewlett-Packard and say, oh, this is great. Is that instead check what VectorVest is saying, and it can also help you navigate and understand the metrics behind it thereafter. Okay, Rick, back to you. Thanks so much for having me.
All right. Thank you very much, Susan. Excellent presentation. As always, I gotta share my screen here again. Susan, we could have a whole other international forum on all the roads I was going down while you were presenting there. So you can see I did bring up, I wanted to see how much effect your trips to North Carolina had from an import-export perspective. You can see you mentioned pharmaceuticals at the top. Isn't it interesting that North Carolina exports 618 million in pharmaceuticals and medicines, but imports 11.2 billion from Ireland? You can see the other things. I wonder what 9,800 goods returned
Of
are there.
360 million. Yeah. So I would imagine, Rick, when it comes to that, and I don't know, but as I look at the differential between those figures, to import 618 million into Ireland and export 11.2 back out, I would imagine that is supply chain. That is what I would understand it to be, is that the companies that are based in North Carolina imports are basically sending goods across to Ireland, they're being processed there, and the value being added in the company in Ireland and then being exported back. That's where I think the differential there would be.
Okay. And then I don't know if I'm going to try not to open a can of worms here. We could go a far way with this, I think. But I have been experimenting a little bit, just started with this graph layout for earnings. So you can see, yeah, I started with the VectorVest Simple. I've got earnings per share. I've got growth rate, sales growth rate. I've got net profit margin. Of course, anybody who watches Russell Markham down in Australia, he loves net profit margin, and it is very useful. So what I wanted to try to use this for was to see if we could kind of get a predictor or a leg up on how a company might fare during earnings. So if we look at Dell, we can see earnings were moving up, just a slight decline there, a growth rate heading up fairly nicely, sales growth, and net profit margin. So, I would have lost on this one, Susan. I might have been expecting a beat, and we know, there's other elements to the earnings calls as well. But yeah, just kind of wanted to show that one, and then look at Netflix. So we see growth rate dropping off. Their earnings are heading up, but growth rate dropping off. Sales growth here, net profit margin, just a slight drop there. Now they gapped up on earnings. And then if we look at HP, we can see the earnings starting to decline, growth rate declining, sales growth rate was rising fairly steady through the last half of the year, and then net profit margin is declining. So it looks like a mixed bag so far. I haven't started keeping stats on this.
Well, what I would say there, the thing to watch out for is the fact that we were in both Dell and Hewlett Packard, you were well into hold territory in both cases. I see where you're going there with the indicators in the graph at the bottom, but I was looking at what was going on at the top, and as you know, the VST factors a lot of this in. And whether it's relative safety or particularly relative safety, and obviously RT as well, but relative safety is factoring all of this in. So the fact that you would have been in very much hold territory at that time is what the name suggests. And obviously then the fact that we're now in sell, but like even with Netflix, that's another company that has really delivered very, very well in terms of the password sharing, cracking down on that, the new content moving into live streaming, gaming, its new advertising model, and on and on. It's an earnings call that I watch regularly, but you still see that has tipped down as well. So I think this is the environment we're living in at the moment, Rick. And of course, it may change. There we go. Yeah, you can see there that has dipped down again in the middle of February. It may change, but at the moment, this seems to be a real defining characteristic of 2025 so far.
All right, so let me get back to the slides here, and let's bring us into a close, because I know we could have a lot of discussions around that whole area. All right, so folks, I do want to remind everybody that we are running another Successful Investor course, free once again. This is usually a paid course, so free once again to all subscribers, including those folks on trial. So if anybody does have friends, family members who are looking at VectorVest, might be a good idea to get them onto a trial so they could take advantage of this excellent course. Something that everybody should take when they first become a subscriber, and many people take over and over again to bring them back to the basics. So live mastery sessions start Wednesday, March 5th, this coming Wednesday. All right, so I do have the link right there for everybody who wants to ensure they register for that. No cost, so why not? All right. And that brings us to the end, folks. As usual, we would like to thank you for spending part of your weekend with us. I'd like to thank Susan for coming once again with another great keynote on earnings. And Clay in the background, thank you very much as well. And folks, I'd like to thank all of you for those folks saying thank you. You're welcome as well. As usual, if you do have any questions, don't hesitate to reach out to Product Support and Training, 1-888-658-7638. I've got the local US number there as well as international numbers. Replay for this recording will be available on the VectorVest YouTube channel immediately following the webinar. All right, and then I've got emails down below, one for support, and then Ray Clark and myself. If you folks have any recommendations for upcoming international forums, feel free to email Ray, myself, or both of us with those. All right, with all of that said, thanks once again, folks. Have a great rest of your weekend, and let's see how things play out. Oh, I did want to address one thing. I think it was, where was that? Somebody was mentioning that it was Bob H, I think, was mentioning that he thought the tariffs were put off until April 4th. I saw the back and forth last week. They're off, they're on, they're off, they're on. I wasn't able to find anything official yet stating that there's been a further postponement of those. So I guess we'll see how this week plays out. All right. But with all that said, once again, have a great weekend. We'll see you back in the markets next week. Bye for now, folks.
Thanks, everyone. Bye.